Hey, hello investors and future investors. Welcome to the channel. For today's video, I'm going to be showing you how to make consistent income using stocks that have just been added to the S&P 500. Today, we're going to go ahead and do a live trade. So I'm going to show you how to make consistent income using these stocks. Now, if you're new to options trading or you're just trying to use options to make some additional income, then you so happen to stumble onto the right video. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video is going to be a continuation from the video right before this. We just did a comparison between Block, which is ticker XYZ, and the trade desk, and that ticker is TTD. Now, we did a comparison and we had to determine which one is better in order for us to make consistent income. So this video is a continuation for that. Now, I have said several times on this channel that options is not black and white. You need to play with it. You need to select different strikes, different strike dates in order for you to come up with whatever works for your portfolio. Your portfolio is completely personalized to you. Only you know the outcome. Only you know what you want to do. Now, that being said, let's go ahead and get down and dirty with options. So we're going to go straight into the trades. Let's go to trade XYZ options down to the bottom in order to open up the options chain. Now we are here on the options chain. It's all this information in the bottom here if you guys are new to options. What this information does, it really helps us make a better, more informed decision before entering any option contract. Speaking about option contracts, before we move any further, I would like to ask you guys to do two favors. Actually, do yourself two favors. Favor number one, always make sure to do your own due diligence before investing. What may work for my portfolio, quite frankly, may not work for yours. Secondly, always make sure to have an exit strategy. That way, if the trade do go against you, then you at least know how to get out of the trade. That being said, let's go right into it. So what we're going to do, we established the $70 mark is both good for XYZ and also trade desk. Currently, both of these stocks are actually trading at the exact same price, around $79, $80. So what we're going to do today, we're going to go ahead and try to perform a spread to see if we're going to get paid. So let's go ahead now to sell. Let's go ahead to put, and now we're going to choose our strike date. The strike date I'm going to be going with is going to be August 15th, and that's going to give me 24 days to expiration. For those of you guys that are not familiar with option spread, go ahead and search the channel for any one of those videos, and it's going to give you a complete detailed walkthrough of how spreads are done, exit strategies, everything. And if you don't know anything about spreads, now would be the ideal time for you to go ahead and like the video and subscribe to the channel. Now that we have sell over here and we have our put and we have selected our expiration date of 24 days, we're going to go ahead and select our strike price. Remember, this is live trading, so the prices may fluctuate just a tad. So now we're going to go below the share price of 79.42. And remember, once again, we established the $70 mark as a good level of support and resistance. So we're going to go ahead, and the strike price I will be going with is going to be the $70 mark. As you can see, the $70 mark right here. Now, with the $70 mark, that's going to give me a chance of profit to the top here of 79% or 80%. 80% is around my threshold. I like 80% or higher whenever I'm doing any one of these options. So with the $70 strike price, that gives you around an 80% chance of profit. Now, with an 80% chance of profit, that also means you have a 20% chance of this trade going against you. But I can live with that. Make sure you can live with it before you even do any of these trades. So now we're going to go ahead and we're going to select our bid price. The bid price for this is going to be 1.56, and since we're selling a put, we're going to be receiving $156. For those of you that are new, you multiply your 1.56, which is your option premium, by 100 shares, which each contract does contain, and that should give you $156. Now we're going to go ahead and do step 2. We're going to go to buy. We're going to maintain put, and we're also going to maintain the expiration date of August 15th. Now, in order to keep this video extremely simple, what we're going to do, we're going to choose the exact strike price right below our previous sell put, and that's going to be the $69 price. We're going to go ahead, we're going to select that one. Now that we have shifted the parameters to buy, we have to pay. The amount we have to pay is going to be 1.4 here or $140. Now, the difference between your sell and the amount you bought it for is going to be a positive, and that's what's going to work out to be your options premium. We're going to go ahead now, we're going to hit continue, and there we have it. If you were to do this option right now, a put credit spread on XYZ at around the $69 price, you would be receiving an income of around, let's round it up to $21. Now let's go ahead and let's see the premiums that actually Trade Desk is offering. So let's go ahead to TTD, and we're going to go ahead and open that up as well. Okay, so here we are on the Trade Desk, and we're going to implement the exact same strategy using the exact same strike price and see what we come up with. And then I'm going to go ahead and perform the live trade. So let's go to sell. We're going to go to put once again, and while maintaining the exact same strike date as the previous, it's going to be August 15th. And now we're going to go ahead and choose our strike price below the current share price. Like I just mentioned before, these two stocks are trading like almost the exact same price. For those of you that missed the first video, the one right before this, the Trade Desk and also Block XYZ have been added to the S&P 500. Whenever a stock is added to the S&P 500, the share price is guaranteed to go up in the short term. The reason why it's going to be guaranteed to go up in the short term is because hedge funds and large institutions, they actually have to buy the actual stocks in order for them to keep in line with their portfolios. They usually have portfolios that actually mimic the S&P 500. So if the S&P 500 were to get rid of a stock, they need to sell that stock. If they were to add a stock, then they need to do likewise. So that's why the share price goes up very high in the short term though. So just be careful about that. Now we're going to go ahead, we're going to choose the exact same strike price, and that was the $70 price. It's right here. And once again, as you can see, our chance of profit right here is around 78.5, which is almost exactly the same as the previous one. These stocks are like so closely identifiable. So now we're going to go ahead, we're going to select that. And once again, because we're selling, we're going to be receiving money. The amount of money for this one is going to be 1.94. Now, if you were to go ahead and do just a single option strategy, no spread, this here would be what's known as the cash secured put. The thing about the cash secured put, if you have a small account, you probably may not be able to trade this, because if you were to do it, you will be receiving $192, which is all good and dandy. However, you would need to leave a collateral, and that collateral is always going to be whatever your strike price is multiplied by 100 shares. In this case, you're going to need to have at least $7,000 in your portfolio. Now we're going to go ahead and perform the second leg by switching the parameters one last time to buy, maintaining put, maintaining the exact same strike date. And once again, we're going to keep it simple. We're going to just choose the strike price right below our previous sell put, and that's going to give us a 69 once again. Let's go ahead and click into that one. Once again, the amount of money you're going to be receiving as soon as you do this option strategy is going to be the difference between your sell and the price you paid to buy. We're going to go ahead, hit continue, and here you go. So once again, the option premium you're going to be receiving is right around almost the same thing. The first one is paying 22, this one is just paying 23. So these are dead on. Now that you guys know that, this is actually how you do options. You need to go to the strike prices, you need to go to the stock, you need to play with your different strike prices, your strike date, to see whatever premium you receive, make sure it works for you. Now we're going to go ahead and we're going to do the actual live trade. Now, what I would suggest for you guys to do, if you guys are performing this, remember, this is not financial advice. This is just what I do with my own personal portfolio. If you guys were to thinking about doing this trade, I would always start off with an 80% chance of profit. That gives you a lot more safety, a lot more surety. Now, for me personal and my risk tolerance, I'll be going with the $75 strike price. The only reason I'm going with a $75 strike price is because I have been trading Trade Desk for a very long time now, so I actually know this stock. So I'm going to go ahead and click into that one. And the first leg is paying me $330. Now to implement the second leg, let's switch buy and put. And to keep it simple once again, we're going to go ahead and choose the $74 right behind. The reason why I'm using the strike prices right below the previous sell is to keep it simple and keep the cost low. In order for you to do a put credit spread, you're always going to need to leave a collateral. Let me show you that collateral. Let's go ahead. We're going to hit continue. We're going to hit review order. And voila, the collateral you're going to need to leave is going to be $100. If you were to change this strike here and go lower down, now your collateral is going to be $200, and the further down you go, your collateral is going to increase. So once again, based on your account value, you could choose whichever strike prices you want. Now, one thing to remember, the bigger you make your strikes, the higher the possibility of the trade going in your favor because you're giving yourself a lot more space to play with. But we're going to stick to this for now. So if I decide to do this trade, which I'm going to go ahead and rock out right now, I'm going to be receiving 32.92 into my portfolio, or let's round up to $33. That $33, investors and future investors, is mine to keep no matter how the trade goes. In order for me to do this option strategy, which is the put credit spread on trade desk, I would have to leave a collateral. The collateral I'm going to have to leave is going to be $100. So my return on investment here is going to be $33. My return on investment percentage gain, however, is going to be 33%. Now, this trade took me, let's say, less than 1 minute to get done, and I'm making 33% return on my investment. That is an extremely lucrative investment. If you're a bit more risk adverse, always feel free to go down on your strike prices. What's going to happen is that your option premium is going to reduce, but the chance of the trade working in your favor increases. So let's go ahead and we're going to execute. Let's go to submit, and that's it right there. Hit done, and that was already filled. So there you have it, investors and future investors. The comparison between the trade desk and also block XYZ, which were both added to the S&P 500. If I had to make a choice, I would always go with trade desk. Not because there's any major variations between them. The only reason I'll be doing that is because I'm more familiar with the trade desk stock. Both of these stocks can be used in order for you to make consistent income. Now, that right there is just a video for you guys that have a micro account with just a couple $100. For you guys with a bigger account, if you guys want me to show you how to trade either the trade desk or XYZ, just go ahead and let me know in the comments below. Now, we're going to be continuing with these kind of live trades. I'll try to do at least once per week. And the second one I do, I'll update you on the status of the previous one. Hopefully, I just remember to get those things done. Now, for those of you that made it to the end of the video, you guys are the real investors and future investors. If you haven't already, now would be the perfect opportunity for you to go ahead and like the video. Subscribe to the channel. Make sure to hit that notification bell to get an alert when I post these videos. But here's the most important thing. I do go ahead and put these videos out in order for me to help as much people as I can make income from using options. Now, if you guys want to help out the channel, the best thing for you to do is to go ahead and share this video with someone you know that's struggling to grow a small account portfolio. That way, we both win. Now, until the next video, keep pushing your investments.